Okay, wanted to quickly touch on the email clouds that I use. I still get questions about this, not very often, but rarely. I still will have people kind of ask for follow-ups on some of the stuff I've written. I did not come up with this. I guess Ripster maybe did. I'm not really sure. He was the first person I saw really publicize it, but this is a pretty nice system to use for trend confirmation. It does not give you ideal entries, so that's the biggest weakness in my mind, as well as you can be chopped out in really choppy markets if you were trading just off of this. But I do think it's great if you're in a stock or an equity or whatever that's trending in a certain direction to use it for confirmation for pullback ads, etc. So it has some pluses and minuses. It really gives nice structure to your chart. If you're a visual person, it really is helpful. I'm extremely visual, so I found it really helpful when I was learning to trade. I still use it on my charts every day with VWAP. I don't trade specifically off of the stuff I'm going to say here, although I think this gives you a really nice structure. If you have discipline, you could use this and make money every day. There are other things I try to use for better entries and exits, but I still use this a lot for trend confirmation. So I think it's a good tool to at least understand and have if you want to. So I'll try to post the script links for several of the different charting platforms. On TOS, you are in your studies, and you can see here it's the EMA clouds. And you can look, there's the option for 3 clouds. I use 2. I use a fast cloud, which I think in my mind is like the micro trend of what's happening, is a 5 and a 9, and then the slower cloud is the 20 and the 50. There is not any right lengths in my mind that you can use. These are the ones that I back tested. I spent several weekends last winter, early spring trying to come up with what lengths worked for me. These were the ones I settled on. I found the 20 and the 50 to work really, really well for kind of like pullback retest for ads, and then the 5 and the 9 paired with that gives you pretty good entries. So these are the 2 that I like to use. Again, I would strongly encourage you to experiment on your own. I think Ripster uses 3 different ones. I would have to look at the links. I want to say he's like a 5 and 13, 34, 50 maybe. I'm not sure. And sometimes I'll have a third one. Just not my style. I tend to use 2, but not a wrong way that you can do it if you are backtesting it and you have the data to say that it works for you and you have confidence in it. So let's look at how you can use this. I first came up with this system that I use. I was looking and trading on the 1 minute chart. I don't really do that as much anymore. I found it to be really choppy. I still, every now and then, if I'm really busy and I'm trying to just get a quick scalp in, I'll do that. But I trade primarily off of the 5 minutes. So I'm on the QQQ here. I'm going to try to go through and mark this as I would normally, and no other indicators other than volume in the clouds, and then kind of just looking at levels as we go. So I have everything else off the chart. Sometimes I'll have VWAP on there, maybe like one other thing, but I really don't put a ton on there. I have after hours turned off just to make it cleaner to look at as we're using this for an example. It will change the EMA length. So an EMA is essentially looking backwards at the last several candles and calculating out the average. So it is not forward looking. No indicator really is going to tell you what's going to happen in the future, but it's giving you kind of the trend average of the last several candles. So it's depending on what time frame you're on a 5 minute. It would be like our 5 EMA on a 5 minute would be the last 25 minutes. So the last 5 candlesticks averaged is what it's showing you. What you're seeing here with the cloud, so this one that is tying in closer to the price is the 5 and the 9 cloud. This is your 20 and your 50. The green signifies that the 5 EMA is over the 9 EMA, and then it fills in the color. As it reverses down, that's the 5 EMA crossing the 9 and it's filling in with red. Same thing here, 20 is over the 50, so our most recent faster EMA is above our slower EMA, and then as you cross over, it changes colors and fills it in. So how would you use this? So you can see here we gapped up. Again, this would look a little different if I had after hours on. I'm going to leave it off. I don't like to take these gap ups with these EMA clouds. It will be closer to your level if you have after hours on. I still would wait, and the reason being is right here. This is actually why. A lot of times whenever you open up outside of all of your EMAs, you're going to have some sort of pullback, or kind of like you can think of it as a reversion to the mean if your EMA is acting as kind of your mean price. You'll have some sort of pullback and retest is what I have found. So you can see here that we open up way outside of the EMA clouds, and that is not dropping down. Use this. So let's kind of mark, this is our open high for our first 15 minutes, and let's call this our low here. And okay, so just these first three candles, that's our high and our low. So that kind of is going to act as our initial guideline. So we open outside of our EMAs. I'm not really interested in taking this either way. I kind of want to see what happens. Again, I just have found that it's not, you're kind of guessing a little bit. I don't have much of an edge. As we come into the day, you can see about 9:45, we get a retest down into this larger cloud. Now, this is what I'm interested in. The reason being is a lot of times if we're in a strong uptrend, which it looks like we are, so we're green here, we're in an uptrend, you will get some sort of retest back down to your larger cloud. And that's a pretty nice spot to have an entry if you're trading options. When you're getting that pullback, you can get a nice entry, especially if you have a defined stop loss. So here, if you use the opening range low as your stop, you could get an entry somewhere. I mean, even if you didn't nail it perfectly, we'll call it 397, and you're risking 40 cents there. So you get an entry, and pretty quickly we're riding back on our 5.9 EMA. We retake the opening range high. You're already up, 2 to 3 points here pretty quickly, and we continue up for a maximum of whatever is that, 3.5 points in about 30 minutes. So pretty nice move. And this is where you will note that it is the single biggest drawback of using the system is that there is not a good designed exit signal. So you really need to take profits along the way. So if I was in this, what I would do is I'd say, all right, so this is my entry. I can scale in more if we retest. My stop is here, this opening range low or whatever, maybe a close below the EMA if I didn't have a good level there. And as we're moving up, I'm probably taking some profits here, and I'm probably taking some profits here, and I may be stopping out somewhere in here. Again, you want to be taking profits and scaling along the way. One of the things that I have noticed, and I will show you an example, is that when you have multiple candles that are outside of your fast cloud system, within 5 to 6 candles is what I have usually found you're going to pull back into it. So I'll give you an example down over here, but when you have 3 to 4 candles in a row that are outside all of your clouds, you want to be taking some profit because you're going to pull back pretty quickly. So that's a pretty nice little move. That's what I'm looking for as an entry. I'm not really interested in this. To me, that is not any sort of edge. You're just kind of guessing. So looking for an exit or looking for an entry to play the short side. So we crossed over here, and our fast EMA is now looking kind of bearish, and we're in the clouds here again. If you were thinking, hey, I think this is a small pullback, I want to go long, there's nothing wrong with that, because let's say we entered, what is that, 397, call it like 9, you're risking 30 cents, so it's still a pretty nice entry even if it doesn't work out. One thing I have found is whenever you have your faster cloud inside of this larger cloud, I tend not to like taking an entry there just because I think that it chops around more often than not. So I'd probably wait this out. So if I was going to wait this out, we break down below that opening range from the morning, and we get a retest here. And at this point, I'm a little bit more interested. So, if you're on the more conservative style of trading, I would probably wait for the crossover here and wait for some sort of retest either to this faster EMA or even down here to this lower EMA, because it's going to be a more consistently profit or a higher accuracy trade. If you are somebody that is a little bit looser and you're like, hey, I've been feeling good, I think I have a good handle on this, to me this is a pretty good entry, right? So we've crossed over, we are looking bearish on our faster trend, and we've looked that way for an hour, and our macro trend is starting to get really, really tight, which means it's about to cross over. So you could enter here and use this opening range low as your stop and see what happens. So if we did that, you get a pretty nice move, and at this point you should be able to visually see this is a lower high, lower low, lower high, lower low, and within an hour you have already got a pretty nice little breakdown of 4 points without ever really being threatened that you're going to get stopped out. Again, if you're more conservative, you could wait for that retest like we talked about in here. This isn't the best example because we have a pretty dramatic move before that happens, but I think there's nothing wrong with that, and pick whatever stop loss you want. If you wait for a close outside of this cloud system, which is how I initially kind of started trading, that's still, let's say you entered at 395, call it 1.5, a 1 point move, and you look at the downside that we get, and you get that very quickly. So regardless, either way, even if you entered here, you're still in a winning trade pretty quickly. This is what I'm talking about with these multiple candlesticks outside of all the clouds. So if you look here, 1, 2, 3, you have 3 candlesticks that are fully outside. They're not touching any of your clouds. Usually when that happens, you will pull back fairly quickly, maybe within 15 minutes, maybe within 30 minutes, but it's going to happen. So as this is happening, as you're getting this huge breakdown, I'm definitely taking some profit. I would leave some runners because as you can see, you can always go lower, which we do here. Um, but I'm definitely looking to take profit. So I would be taking some here, leaving some. This is a lower low. I'd take some here, lower high. So again, this is a beautiful trend. So I'm probably still in my position. Lower low. I'm looking to take some more here. If I have any left, I'm going to stop out in here. That's a lot of times my sign to exit, like we talked about up here, is whenever you get that color crossover. So now it looks like we're changing over to a bullish trend and we're back within the clouds. We're going to chop around, which is what we do for a few minutes. So that's what I'm really looking for entries is some sort of clear signal. I want my faster cloud trend to break below or above my slower cloud, and I really want a clean entry or a retest for that. So the retest is better, but sometimes you can get that clean entry and get the bigger move and just scale in on a retest. So that's another way to trade it. And this is kind of what I'm talking about. I actually had not looked ahead on this, but it's a good example is you get inside here, your faster EMA crosses into your slower, and then you look and we just bounce around for till the end of the day. You just chop. It's one of those choppy sessions. So moving ahead, this is I think Friday. Again, haven't really marked this level at some point. We'll just delete that and we'll delete this one. Okay, so this is our open here. And again, I usually mark the first 15 minutes, so I can write in here. And that never be sloppy, but there we go. Okay. So there we go. And again, we open and we pretty quickly knife down. And at this point, this is where I would be looking to enter. This is pretty nice. So you have what looks to be setting up to be a fairly strong, we've crossed all the way outside of our 2050 EMA cloud, and we retest here. You could also enter here on the retest on this faster cloud. So you have a couple of nice retest options as it looks like we are breaking down. So either one of those would be a nice entry. Again, move down. Some of these, you'll notice with SPY and QQQ, there are days that it's just beautiful, beautiful trends that you can track. So lower high, lower low, lower high. You can just go all the way down. Again, are you in a perfect world, if you're the world's greatest trader and you're never at, are you holding for the very bottom of the move? Sure. In actuality, I'm taking some profit here. I'm taking some profit here. I'm probably at least half out, if not more. Taking more profit here. I'm probably down to just runners at this point, if anything. And in here, I'm stopping out because why? We have this cross back over to the bullish fast cloud, and we are back inside of our bigger cloud system. You could, if you had no position, could you try to use that as an entry? Again, I don't hate it if you're not already in, but if I'm in, I'm actually looking to stop because to me that means we may get choppy. But you could enter there if you wanted to and just use, this is your stop loss or this is your stop loss. You still get a nice little move, but to me that's not good risk to reward at that point. Whenever you've been riding outside for a long time and then kind of close back up in here. So again, like we talked about before, a lot of times it will get choppy and kind of are chopping around for a little while here. And now we have a break above. This is Monday. We get a break above on our fast cloud and retest. So boom, this is actually the best example I've seen so far. This is where I would really want to enter. So we have been chopping around and you can look and just see these higher lows that are setting up. And our fast cloud is bullish, our slower cloud has just turned bullish, and we are retesting that 50 EMA, which is down here. That is, to me, that's the best entry that you can get as far as risk to reward. Because what happens if you close outside of this, you're gonna stop out. So you're risking 15 or 20 cents for a whole massive move on some of these things that like to trend all day. So you could enter here, you could enter some here. I mean, technically, if you got super duper, I think that closes outside of the 50. I would probably kind of wait to see what this next candlestick does, but again, you're not really risking very much there. So great entries. You could, if you were super conservative, wait again until you have a close above this level that we marked before, which would have been in here. So regardless, let's say you got in on the second one, we'll call it 382 just for ease here, and you get a really nice move. You're riding this fast EMA cloud. Again, I'm probably taking some off somewhere in here. And here, look at all these wicks. I'm taking some more off, but you still get a really nice kind of stress-free move doing that, and then you close back in the clouds here. Again, if you are thinking, hey, I am bullish about tomorrow, is this a terrible entry? No. The problem is that it could gap down on you, but let's say we were at 1 o'clock in the afternoon, you're still in a decent spot, even though, like we've talked about several times, this is usually going to get choppy. Your stop loss is pretty minimal. So you have a pretty nice risk to reward, which is really what it all comes down to. As we talked about before, I don't love these entries where you gap up and I have my after hours off, but I don't love that as an option. So here I don't really see anything entry-wise that I'm loving. We break back down in here again, and you can see it's obvious when you start trading with this what is going to happen, but as you close in here, especially when there's levels, it's going to just bounce in between these until some sort of defined trend happens. Man, that got weird. Let's see if I can. Where were we? I think we're right in here. So we'll wrap up this last half here. Okay, so yeah, so bouncing around. I don't love either of these. This would have been the first spot. Hopefully it's becoming even clearer now as we're doing this, what sort of things to look for. So you've broken above here fairly clearly. Yes, this is bearish technically, but you have to understand we have not been in an uptrend that long and we've been chopping. So it will continue to fluctuate red to green a little bit, which is why I like this larger EMA as kind of a confirmation. So we are bullish here in our kind of longer look back over a longer period of time. So even though it's technically barely bearish, I really like my risk to reward of taking this at like 397.3 and just saying I'll stop out down here, 30 cents below. And that pays off. So you have a higher low, and you could wait here. There's nothing wrong with that if you wanted to take a higher low entry back into the clouds. And again, take some profit here. There's 2 candlesticks full. You have a big move and 2 candlesticks, take some profit. Higher low back in the clouds. If you're scaling, you could scale in again. I mean, there's not really anything telling you that this is going to change right now. Yeah, this is red, but I mean, look at how strong this uptrend is right now. So you could enter again. Again, I'm probably taking some profits here. Definitely in this range as we're moving way outside of our clouds in here. I don't really like any of this for any sort of entry. I would get, again, just the way that I trade my stop loss would be as we close, probably like right in here if I had anything left, but I usually do not wait that long. And we'll do one more example here. So we break down, we're looking bearish, our fast trend, we come all the way down to this previous level, which is really nice. And you could definitely take this, like maybe this kind of retest here. So you have kind of a bear flag looking move and then a retest up. We are technically still bullish, but you can tell, again, it looks like we're about to cross over. If you're a little bit more aggressive, that's not a bad entry. And just say your stop loss is right up here, like 20 cents higher. You get a nice move down, take some profit off at your support down here if you're short. And again, you can enter right here. So is this bullish? Yes, it is. But again, we're looking like on a larger time frame, we're going to be bearish, which is why I like to use these in concert with one another. So you could use either one of, really, you could enter here, here, here. You definitely could get stopped out here. And I think retrospect, it's hard to do these analysis. So I think if I had entered here, I probably would have been stopped out up here. Ideally, you maybe get an entry somewhere in here and just risk 398.7, which is a nice move. That's a little bit of a tough one, though. That would be one where I think you would probably get chopped out. But if you played it perfectly, you could definitely enter somewhere in here if your stop loss was this higher level. Again, break down to the level. This is, to me, probably a safer entry because you close within the cloud system pretty clearly, and then you break back down all the way down in here. Again, be taking some off. So that's the 5-minute kind of synopsis. We really want there to be a clear break above or below with our faster cloud. We want confirmation from our slower cloud system. If we're really aggressive, we can take those candles that close. So if you're super aggressive, you could even take like the candle, this close of this candle right here. You will see from testing this that is just not the best entry. You can, if you are patient, you will get a better entry probably 80% of the time. There's 20% that it's going to run without you. That's okay. Most of the time you can get a better entry where you have very, very minimal risk. And then going over to the 1 minute, you can use this on any time frame. So let's actually back out to like a 1 year, 1 day. Those are all levels that I marked. But you can really use this on whatever time frame you want to. I'll close with the 1 minute in just a second. But depending on how you like to trade, let's say that we are maybe taking, you know, calls or puts several months out on QQQ, and you can look and say, okay, so our 2050 EMA cloud is pretty bullish, and even though we have a little small pullback here, we're still looking bullish in a big picture. So I'm going to wait for some sort of either confirmation that we're in an actual bigger downtrend or a cross back over, which is what happened. So our 5 and 9 crosses over. Again, retest down on June 3rd, and then we just rip for a month. And you don't really have any, I mean, you have some weakness in here that you would probably be taking some profit. This is a pretty clear signal you need to be taking some profit. But again, this is a pretty stress-free trade. If this is your entry and your stop loss is either trailing or some sort of close below the 50 EMA, you are doing fantastic. Like you got October calls, you're never really threatened until somewhere in here. Again, what am I looking for an exit? It's sort of the same as the 5. This needs to cross back over to red. It needs to be within my larger cloud, and I need to close. So this is technically red. This is technically within the cloud the candlestick is, but my micro trend EMA is still outside of it's above my 20. So I'm not as concerned that we're going to get stopped out. But depends on your risk tolerance and what you want to do. And same thing here. So let's say that you're looking bearish, you would take this retest because now we are gray and you get a nice little move. Obviously QQQ has been kind of ripping, so not really the year you want to be going short, but you could get a nice 4-day move, although you would gap up and get stopped out here if you didn't take profit. So part of it. Again, last example, you could re-enter here if you wanted to and say you could scale more down to the 2050 or just have a stop loss wherever you wanted to. You never really retest until way up here. All right, on the 1 minute. So it's a little bit different than how I trade with the 5. And it is because it is really primarily for scalping. So really, really easy rules for entries and exits. For an entry, my red cloud needs to be fully below my gray cloud. And I don't really care where, as long as my candlestick is closing below this gray cloud for puts, that's all I need to see. So I could enter right here, and my stop loss is either the high of that candle, or I guess the open and close in the opposite direction of that candle, or a close above my 2050 EMA cloud. So enter at 394. You could wait for this retest. Again, that's fine. Break down, and again, you see now a couple of these candlesticks are outside. In the moment, this is probably a pretty good sign that we're going to reverse. Just look at that volume, nice hammer, be exiting there, but that's a nice little move. In like 10 minutes, you get a point. So same thing here. I'm not interested in any of this. Why? It doesn't meet my criteria. It needs to be green, and I need to close outside. So here, technically, you could get these. You would get stopped out pretty quick. That's okay. So this would be your stop loss. Would be whenever we close back below. So that one would be a loss. And let's say, all right, we're going to try it again. And so this would be my entry right here, 393.9. And if your stop loss is down here, you're never going to stop out, and you're going to ride that all the way to up here, which is like 2 points. And then even if you were going to stop, you aren't going to get stopped out until, I guess, back over here, which is still 1.5 up. So you can kind of already see the downside to the 1 minute is that you do get chopped out. If you are disciplined, though, your risk to reward is still going to be really, really nice. So like this one loss we had, I don't know what that was, but it was pretty small. Let's see. So 393.94. So 20 cents, that's pretty minimal, right? Compared to a 2-point move to the upside. So even if you're 50-50 with this, you're still going to make money. Again, none of this, we haven't crossed over. So in here is really the first time that we cross over. I would like this as an entry. Again, you get chopped out on this one. Come down get a nice little move kind of quickly, like 50 cents. Stops you out, and let's just say, okay, so we maybe made money here, we maybe got stopped, I'm not really sure. Let's just do it again. So we enter wherever you want to. I guess you technically could enter any of these. Let's say say we were smart, we waited for a retest, we took this one. So we get 394.2, and then you get this move all the way back down. So even there, so you're 2 for 4. I didn't pre-plan this. This is just me looking at the chart from today. You batted 50%, but your 2 wins are 2 to 3 points, and your 2 losses are 20 cents. So if you are smart, like any system, you will make money. I hope this is helpful for you guys. If you have questions, please let me know. I would really strongly encourage you to backtest all of this. I don't think that there is making sure we are still recording. I don't think that there is a perfect way lengthwise that you can run this. I think that you should figure out what works for you and come up with a plan. So hope this is helpful for you guys, and I will catch you soon.